If you were to divide up investors that you talk to about ESG investing, how many of them fall into the category of investing because of their values, and how many of them see investing in ESG as a way to extract value? How would you break it down?
Well, generally, they all want to do both, so do good and do well. Today, globally, there are $23 trillion which are invested with some form of ESG, and it's a market that has experienced double-digit yearly growth. So, of course, there are many reasons and motivations for that. I have to say, though, that key one is that it delivers results. We now have mounting empirical evidence to show that these ESG investments have performed equally or in a superior manner to the traditional investments. If you choose the right and financially material environmental, social and governance criteria, that is, and it's for instance what Societe Generale's research has done. They have a strategy. If you select the top 10% best pick over the past 5 years, it's outperformed its European benchmark by over 27%. Then, of course, as you said, there's also, I see a growing focus of consumers and investors alike to sustainability. And so they want their investments to deliver a positive societal impact. So it has to be both a good business opportunity and an opportunity to do good.
Isabelle, this is a key point, I think, and I wonder, when you look at ESG investments or ESG companies, where is the outperformance coming from? Is an ESG company better at earning money than a company that's not concerned with the environment and societal issues, or are ESG investors driving up stock prices simply because they put so much importance on these issues?
Well, there are two aspects to the outperformance. The first one is with ESG performance, companies are protected against some form of downside risk and potential scandals or controversies. Initially, sustainable investing was actually mostly about excluding certain, controversial companies or sectors from a portfolio. But more and more, the story has a positive spin to it. And investors are actually seeking to seize growth opportunities because those companies which are well managed from an environmental, social or governance standpoint are also those that are well managed, period. And that's also a reason why they tend to outperform. Finally, they're usually well positioned in growing sectors of the economy. And I can take an example that the United Nations have set ambitious sustainable development goals to achieve by 2030, and that represents trillions of dollars of investments each year. So, of course, those companies which are transitioning and positioning themselves in these sectors are bound to seize growth opportunities.